Now let's have a look at NASDAQ and S&P. Well, you know, I continue to remain bearish on this, but I'm allowing for big rallies higher on both of these. NASDAQ is actually at a crucial level. We've got this 12,800, 12,900 Fibonacci level. That's an obvious key level. But before we get there, and that's probably where we're headed, up to about 12,900, 13,000. Looks to me like we're heading there. It's a previous low. It's a Fibonacci number. It's the 38% fib of the entire move down for last year up until early January, the beginning of this year. That's an obvious resistance level. It's also previous support, resistance there, support here, resistance there, and that's at 13,000-ish. But before we get there, I think we might have to retrace a little bit because we've gone up so dramatically early in this year. And if we just have a look at a measurement of this, where's that thing? If we have a look at what's going on here, how much have we rallied so far? 17.7% since the beginning of the year. That's normally what one would expect in an entire year. We've done it in a few weeks. So I think we could pull back down to this trend line. It's really overextended at the moment, but doesn't mean I don't think we're going to have a go at 13,000. I think we probably will. So let's look for a pullback down to the trend line and this red line and these previous highs, which were at 12,200. Look, that's where we broke out from there after the Fed meeting, 12,200-ish. Call it 12,200, maybe even 12,100. Somewhere around there. That's the target for shorts, and there we'll be looking to reverse and get back in long for a target of 13,000. Okay, so you got it short here, down to about 12,001 or 200, exit, reverse, buy for a target of 13,000. Simple strategy on NASDAQ. That's the way we want to play that one. I think we've got every chance of hitting that Fibonacci level, previous support and resistance, and potentially even higher. One daren't think about it because there are an awful number of people who are short this market. And, well, no matter what Jerome says, Powell, not that pally with him, no matter what Jerome Powell says, and no matter what, how many times he says we're not going to stop raising rates, no matter how many times he says there's a lot of work to do, no matter how many times he says the job market's too strong, spending's too fervent, etc., and we're going to stay the course, and 2% is our target. No matter how many times he repeats all of those mantras, the market continues to rally. And, well, such as the markets want. They're entitled to their collective opinion. And I think there's a bit of exuberance and expectation of easing coming down the line, which may not arrive, but maybe it will. Maybe the Fed isn't telling the truth. Who knows? But anyway, we're going to aim for 12,900 and then maybe even 13,600. But before that, we want to dip down to 12,001 or 200, exit shorts, reverse, rally up to 12,900, exit, dip down, reverse, sell, exit, buy again for 13. So we're going to try and stagger this up, selling at the tops, buying at the bottoms, selling at the tops, buying at the bottoms, and we'll work our way up to the eventual top. We'll get one of the last trades wrong, either the buy or the sell. Doesn't matter, but we'll have hopefully made some profits as we go along. So that's NASDAQ, and pretty much S&P is the same. We're short on this one too, but we're at a clear resistance level. So it's a little bit too tempting for this to break through higher right now. But I think we could pull back on S&P as well. We've got lots of support. We've got this trend line. We've got the 20-day moving average. And I kind of like the look of pulling back to 4060, and maybe even we could get back down to the 4,000 round number. So right now we're short, waiting for dips down to 4060, maybe 4,000. And once again, we'll look to exit there and potentially look to try small longs for a move back up eventually on S&P to 4,300. And that's the next major resistance. We have broken above the descending trend line. We've broken above the 200-day moving average. So all we can say right now is that we're bullish, but we'd like some pullback. We're going to try and short these pullbacks and then get in long once we've completed those pullbacks. So that's the overall strategy on stocks. Pretty simple, really.